Good morning, good morning, good morning. It is Tuesday, the 2nd of September, all day. You join myself and Mr. Michael Brown for the Morning Blast, where we give you a review of yesterday, a preview of today, add a bit of value, put a smile on your face. What's going on in markets, news, courtesy of our dear friend Zach Eisman. Follow Zach, and also good morning to Zach. I can see him there. But before we crack on, I will get the legals out of the way. Nothing discussed on this space session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Michael Brown. Mr. Michael Brown, before we start, I guess we better just take a moment, have a couple of seconds of silence for our dear friend, the gilt market, which seems to be on on its last legs right now.
Well, very good morning to you, Ryan. Good morning, everyone. I was just thinking, those dancing pallbearers that did the rounds a few years
Oh,
ago. We could
hello.
send those into Downing Street because more nails being hammered in Rachel Reeves's political coffin this
I
morning. That's
mean,
for sure.
let's be honest. It's not only is she inept, but as we've said before, unfortunately, who the hell do we replace her with? But it's, we've had a couple of replacements. There was a bit of there was the reshuffle. There wasn't a reshuffle in Starmer's government yesterday.
Hmm.
And again, it's more people coming in to support the economic decisions that are being made that have no fucking clue what they're doing. Um,
Well, it's just, you say reshuffle. I've made this joke yesterday. I'm going to make it again. It's just shuffling deck chairs on the Titanic at this point.
yeah,
And, Keir Starmer, I don't want to get political, but he was saying yesterday, that phase two of his government starts today, fine, but how has the market reacted? Well, last night we saw the 10-year gilt yield close at its highest level since May at 4.75%, and we've pushed further north of that this morning. And this morning, the 30-year yield has opened at 5.68%, which is its highest level since 1998. And I think you're absolutely right. The sort of fiscal woes that we have here in the UK that we all know about, they're very well documented. There's no obvious or straightforward or simple way for Rachel Reeves to wriggle out of this current
no.
predicament. There is no obvious replacement for Rachel Reeves,
Well,
as
no,
we've
no, this
said.
is it. No, but no, this is the problem, though, my friend. There is an obvious replacement. We know who's going to probably be stepping in.
No, well,
Well,
it
we know
can't. What are you saying, Torsten?
we know the type of people that are going to be stepping in to
Well,
replace her, and
yes,
unfortunately, they're far worse. And
yeah.
I'm genuinely worried about the gilt market right now because
I think that's
it does feel like we're hitting that moment where, it feels like something. When a market starts getting a bit, bit itchy, and then all of a sudden one extra like kind of decent sell order goes through, and all of a sudden there you go, it just drops like 2 points, 3 points. I do feel like, I'm not just saying this, I'm very always against hyperbole for the sake of it, but the way the gilt market's behaving right now, it wouldn't take a lot for some quite serious moves going through, like we saw with like trust, that kind of thing. Because at the moment, I've got Judith Chalmers, our dear friend Zach Eisman, screaming at me right now saying yield curve control is coming, which I wouldn't be
Oh,
surprised.
someone raised that with me this one. I wouldn't rule it out, but I think to
Well,
say yield
unfortunately,
curve control is coming is a bit of a stretch when the
yeah,
Bank of England, who are 200 yards down the road, are still selling gilts every week. To
yeah.
pivot from that to YCC in
Oh
an
no,
instant is a bit of a
absolutely.
stretch.
Absolutely, but I can see something breaking here. Like we saw in trusts, the market's kind of completely broke. Apparently he's half joking, so he takes it back a little bit. But he's right to half joke about it. But it does feel like that the gilt market is on the verge of a few things happening. A few serious like liquidity providers pulling the plug for the time being. To be a gem right now, God, you're getting less sleep than me and you.
Yeah, and that's not a lot. The one that interests me though, and we'll get on. Well, I haven't got much else to say this morning, given that it was Labour Day yesterday. The thing that interests me though is the pound. Obviously, cable's
Yes.
trading up at 135, well, 134 now. We've had a bit of a wobble this morning. A big chunk of that move is obviously because of the significant weakness that we've seen in the dollar. But
Yeah.
if you look at some of the sterling crosses, the quid's been relatively resilient in the crosses. Sterling Kiwi's trading at 230. Sterling Aussie is trading
Yeah.
north of 2. Sterling Yen is trading about 200-ish, or at least it was when I looked earlier on. You just kind of look at all of that and go, this is a sterling rally ultimately that's built on basically nothing at all.
Yeah, no, absolutely.
And actually, one of the sort of other sort of worrying developments that we've seen this morning, and again, it's a
It's
microcosm. We're 35 minutes into the trading day,
got
but
both being
just
sold off.
yeah, exactly. So the 30-year gilt is up 5 basis points as I speak right now, trading at 5.7%, and cable is down 0.9% on the day. We're down over a big figure from the highs overnight. Again, that is never a particularly
Yeah.
promising sign.
So
Let's put it that way.
just a quick one for anyone that maybe not understanding or new to markets or whatever. Obviously, for bond markets, or so in this case, gilts, if the price is sold off, yields are rising. If prices go up, yields fall. So what you tend to see is this currency and the currency market and the bond market, in this case the gilts, the price of them will naturally go in opposite directions. If they're both coming off at the same time, they're both going up at the same time, something's not quite right in the dynamics and the plumbing. Obviously, when they're both coming off at the same time, it's very concerning if you're sitting in the treasury or if you're sitting in
Yeah,
trading
it
in
im-
Wall Street.
it implies ultimately a crisis of confidence in the country, as
Exactly.
opposed to normally that relationship, all else being equal, would be capital flows into a high yield jurisdiction. The
Yeah.
fact that it's
But
not.
this is just get out of everything related to the UK,
Yeah,
basically.
exactly that, exactly that. And I guess the other thing is, folks are going to start throwing around: is it Quasi all over again? Is it Liz Truss all over again? The gilt market is very different to where it was literally this time 3 years ago. The one
Well,
of
it's
the big
higher for
differences,
one.
well, I was going to say, not only are yields higher, but also from a more sort of structural point of view, you would hope, if not expect, that all of the LDI nonsense has been resolved by this point.
Yeah.
The other thing is the dynamic from a monetary policy perspective, whereby in 2022, the BOE and other G10 central banks were raising interest rates. Obviously, now we're seeing central banks across G10
Yeah.
embark on an
Yeah,
easing
that's valid.
cycle. So the dynamic is slightly different, but nonetheless, Rachel Reeves is probably in tears again. Let's be honest.
Oh, yeah, bless her. But no,
No,
but the
not
thing is as
bless
well.
her. Do you
No,
know
I know,
what?
I know, I know.
I don't want to sound harsh or uncharitable, but to be completely
Oh,
honest
I
with
didn't
you,
mean bless her, Bill. I didn't mean bless her.
it's a mess of our own making. Let's be
Oh
frank.
yeah, you know I don't really mean bless her. You know my thoughts on Rachel Reeves. But just again, one thing, because obviously everyone's saying, oh, why isn't she already out the door? Rates, the yields are higher than trust. The issue with trust was the volatility of the market. It wasn't the bottom
Mm,
line price of the gilts. It was the move that got us there.
yeah,
Which is a bit. I will always feel sorry for what happened to trust, because I do think this was a market move generated by the media as much as anything else, as opposed to her budget, etc. And I do feel like the budget and what we're seeing now with Reeves is far worse, and by magnitudes worse than what we saw with Quasi and Truss, etc.
I think the
Um,
the other the other thing just on that, in terms of her future in particular, is that from a political perspective, and let's be honest, this is all political at the end of the day, for Keir Starmer right now, there's no real political upside in sacking his chancellor today, because she hasn't even delivered the budget yet. Let's be honest. From a purely political perspective, Starmer would only dispatch with Rachel Reeves' services, I imagine, when it's the most opportune moment to try and save his own bacon.
yeah,
And that's probably going to come either probably after the budget is actually delivered, when that goes down like a cup of cold sick. That is probably when Starmer will turn around and say, "Look, Rach, off you go. You've done
yeah.
your time
No,
here. You serve no more purpose to me."
well, I was thinking exactly this. Again, apologies for people that don't really care about gilts in the UK, but unfortunately, it's quite a big story, and we're both English, so go fuck yourselves. In the nicest possible way. But I was thinking this morning. I was like, what could Starmer do right now, or Reeves do, to actually stem this tide? And really, all I can keep coming back to is, like you said, you can't really fire Reeves, because everyone's going to go, well, whoever replaces her is going to be far worse, so
Mm,
I
mm.
can just sell some more. Basically, all he can really do is all these new people that come in to support Reeves and support, like, the government's economic plans or whatever. They've all been the wrong people by by a distance. So basically, all I keep coming back to, all he can do to really appease the markets is get rid of all the new people that have come in to support Rachel Reeves, the Treasury, and economic policy, such as your Torsten Bells, etc., and replace them with people that don't actually, for once, replace them with people that don't get hard for taxation.
Which he's not going to do. And also, I would argue that, I don't want to speak for anyone else in the industry, but any economist or market strategist or whatever who actually understands how things work, why the hell would they go and work? Well, why would they work for
No,
government full stop? Certainly, why would they go and work for this government?
no, absolutely. But you see my point, right? Yeah, that's pretty much the only thing the only chance they've got of turning this around, in my opinion, is to fire the people that are now currently scaring the market,
Which won't happen. So,
which won't happen. So, look, put it this way, yields are screaming higher, gilt markets are, hitting, the market itself, prices falling through the floor. Would you be buying it here? Would you be looking to pick up? Would you be looking to catch the knife? Because I certainly
no.
fucking wouldn't.
Absolutely. Well, unless you were doing some sort of convoluted capital gains tax efficiency play and hoping to hold it for 20 years. But apart from that, absolutely not.
No, which is the worrying
Um,
thing. Anyway,
anyway,
sorry,
let's move on from that because
yeah,
we'll probably have to cover that, for about 15 minutes every day for the next God knows how many months.
yeah.
There were not really anything else going on yesterday, to be completely honest with you. It was obviously Labor Day, so the US desks were closed. They have, of course, come back from their holiday weekend today. In terms of other notable market moves, I guess the only real move of any note has continued to be seen in the precious metals complex, and gold trading to fresh record highs in the spot market overnight, north of $3,500 an ounce. We have encountered a little bit of profit taking at those new record highs. We're probably about $20 or so off the record as I speak this morning. But nonetheless, gold still firmly in the market's favour at this moment in time. A lot of people saying, oh, this is because the Fed are going to cut rates in September. I just think that's complete and utter nonsense, to be honest with you. We've known since the 22nd of August that the Fed were going to cut rates in September. I think this is more a continuation of that play on just fading confidence in the US and indeed the dollar, and certainly in emerging markets, allocators seeking to diversify their reserves, which frankly they have been looking to do for, well, months, if not years at this moment in time. In terms of fundamental developments from yesterday, as I said, things lacking somewhat. It was obviously Labor Day, although President Trump did not take the day off. He was waffling away on Truth Social about India and how they've offered to cut their tariffs on US imports to zero, but how it's getting late and they should have done this years ago. Frankly, it was a very rambling Truth Social post that offered nothing by way of notable new information. Of course, India, their exports to the United States currently subject to a 50% tariff. That is 25% as a reciprocal levy and 25% due to their closeness with Russia. If India were even thinking about seeking to allay Trump's concerns about that closeness with Russia, they're not really doing it, given that Modi was shaking hands and hugging Russian President Vladimir Putin yesterday, and also talking on Twitter about how he's a visionary leader and God knows whatever else. So it looks like things could take a while to get resolved there. Also on the trade front, Brazil, they're subject to a 50% tariff as well. They have called a virtual meeting of the BRICS nations. That's going to take place next Monday. The Brazilian president wants to discuss tariffs that have been imposed by the United States, but also, and I quote here, according to Bloomberg sources, rally fellow heads of major emerging market nations in support of multilateralism. Good luck with that
Love
one,
it.
pal. Other bits and bobs from yesterday, we did hear from Treasury Secretary Scott Bessent. He was giving an interview to the Washington Examiner. All the usual nonsense around the Fed need to lower rates, Trump can fire Fed Governor Cook, yada, yada, yada. The most interesting news line from the article, though, was that he said President Trump might declare a national emergency around housing this autumn, purportedly, I should say, to address rising prices and dwindling supply. rising prices bit, fine. The dwindling supply bit, that is just absolute, complete and utter nonsense. In fact, housing supply in the US has never been more plentiful since records began than
Yeah.
it is right now. So I'm not entirely sure where Besant has got that one from, but it does feel like that could potentially be another avenue that the Trump administration go down in their continued efforts to try and force the Fed's hand into much looser monetary policy stance. Obviously, Bill Pulte, the complete muppet that he is, has been harping on for months now about how people can't buy houses because the Fed funds rate is too high, which is nonsense in itself. But nonetheless, it does seem like the admin could go down that route. Obviously, we've done UK politics, so I don't need to go back into that, although we did hear from Starmer yesterday saying that he will definitely lead Labour into the next election, which feels like that comment could come back to bite him at some
Yeah.
point in the future. So I guess the only other notable thing from me this morning is corporate news, just one piece, which is that Revolut, of course, the fintech banking firm based out of Canary Wharf, they have launched a secondary share sale which values the company at $75 billion. The reason they have done this is basically to allow liquidity for some of their employees. They've got various bonuses that are linked to shares, and rather than waiting for an IPO, they have conducted this secondary share sale to allow some of their employees to cash in those options. And that is all from me for the time being.
Wonderful. Thank you, Mr. Michael Brown. So I'll just read off some of the select headlines from Zach's always awesome overnight news roundup. Do follow him on Twitter. It is the best place to get access to all the overnight news headlines you might miss whilst you were sleeping, if you sleep. And starting off in tariff and trade. Trump said on Monday that India's offered to reduce its tariffs on US goods to zero, while calling the US relationship with India, quote, one-sided. Besant, he expressed confidence that the Supreme Court will uphold Trump's use of the 1977 emergency power law to impose sweeping tariffs on most trading partners. Europe, they need to help its copper smelters by stemming huge flows of scrap metal to China. That's gone to Germany's economy minister, potentially opening up a new front in trade tensions. Japan, they will handle US demands to buy more American rice within the confines of its existing overall cap on duty-free imports, with no plans to lower its tariffs on farm products. That's gone to Tokyo's top trade negotiator. ECB Schnabel, she told Reuters that the ECB should keep interest rates steady as the Eurozone economy is holding its own in the face of US tariffs, and inflation may still come in higher than expected. She warned global rate hikes may come earlier than people think. Macro
Talk
news.
about timing on that one.
Yeah, right, exactly.
I mean, what?
Jesus. Macro news. Bank of Japan Deputy Governor reiterated the bank's standing policy on raising benchmark rate if conditions allow, while steering clear of making any hints as to when that might happen. That sent the yen lower. Japan's 10-year bonds gained after a sale of the benchmark tenor saw its strongest demand since October 2023, brought short-term relief to the market. Sticking with Japan, the Prime Minister Shiba plans to ask ministers as early as this week to compile an economic stimulus package to punish inflation and Trump administration tariffs. The gold that punched through the magical $3,500 level to hit a record high on rate cut bets.
Magical.
Well, that's my wording.
Well, I was going to say, I thought young Zach had written that.
No, wasn't that? Wasn't
It's
Bloomberg?
far
Was
too
me.
straight laced to do that.
Well, exactly. US Treasury Secretary Besant said on Monday Federal Reserve is and should be independent, but has made a lot of mistakes, as Michael was alluding to earlier. Australia, the second biggest pension fund, has grown increasingly bearish on US
Oh,
Treasuries
yeah.
due to concerns about Washington's policies may stoke inflation. Oh, yeah?
Oh, do you not have the next line in that story?
No, go on.
Oh, okay. Well, I can tell you what the next line in that story is, which, as you said, is they are bearish on US Treasuries due to concerns that Washington's policies may stoke inflation. The chap who runs the Australian super, a guy called Jimmy Luca, said, and I quote, "There's better value elsewhere, like Australia and the UK."
Oh, hang on. I'll tell you what. If you own if you've got money in this Australian
Take it
pension
out.
pot,
Just get rid of
take
it
it out.
now.
Just get right. Honestly, this is not trading or investment advice, obviously, but take it and run, Put it. I'll tell you what. Just put it on the dogs. Put it on the nags. That'll be a better bet than this.
I mean,
Right.
seriously,
Anyway.
what is that geezer smoking?
Oh, Jesus. I don't know, but where can we get some? Chinese investors are borrowing a record amount of cash to buy local stocks. This is like an ongoing story right now. You know, when you've got companies telling punters, please don't buy any more of our stock because we're already at a 5,000 PE ratio, you know, things are getting a bit frothy. Um, South Korea headline inflation eased for a second consecutive month to a 9-month low in August, remaining below the central bank's 2% target, paving way for more rate cuts to support the economy. Russian crude, that's getting even cheaper for Indian buyers as New Delhi faces sustained US pressure to cut its oil trade from Moscow, with Trump administration saying it's helping fund the war in Ukraine. Well, that's obviously it is. Sticking with that kind of vibe in geopolitics, Russia's Gazprom announced it signed a legally binding agreement to build the long-anticipated Power of Siberia 2 gas pipeline to China via Mongolia, and will expand deliveries through other routes in what will be seen by the Kremlin as a major political win. North Korean leader Kim Jong-un unveiled a plan to develop a new intercontinental ballistic missile, renewing his push to advance country's weapons program just as he prepared to arrive in Beijing for a rare meeting with his Chinese and Russian counterparts. Equity news. Tesla's long-awaited entry into India has delivered underwhelming results so far, with tepid bookings fueling fresh doubts about the company's global growth outlook. The blows keep coming for BYD after a shock slump in profit that rattled investors. China's biggest electric vehicle maker has seen monthly sales stall as smaller, nimbler rivals chip away at its ascendancy. This is also negative news for Tesla as well, because Tesla if you think BYD are doing poorly, you should see Tesla. Airbus delivered about 60 jets in August, leaving 2025 deliveries at around 433, or 3% behind last year. The jet maker targets 820 deliveries this year, but needs a record 97 monthly deliveries from September to December amid engine delays. Nestle, they said it dismissed Chief Executive Lauren Freaks with immediate effect following an investigation into an undisclosed romantic relationship with a direct subordinate that breached the group's code of conduct.
Wandering hands.
Wandering hands. Two left from me. Japanese. Japanese Bitcoin
Don't do the
Treasury
eyes.
Meta. Don't do. Oh wow. Japanese. Oh God, stop it, right. Japanese Bitcoin Treasury Metaplanet secured shareholder approval for a proposal enabling it to raise as much as $3.8 billion via preferred shares in a bid to expand its financing options after the stock slumped. And finally, India's Reliance Industries stands to benefit the most from China's push to curb overcapacity from a gamut of industries and conglomerates-owned efforts to streamline its businesses. That's according to Morgan Stanley. Not really sure what they're on about there, but there you go. Back to you in the studio.
Good stuff. Thank you, Ryan. In terms of today then, of course, I think we'll be watching gilts like a hawk for most of it, although worth watching the long end of the Treasury curve as well, the 30-year yield creeping up north towards 5% once more. As for scheduled events, though, there are a couple of things on the data docket. At 10 o'clock this morning, we get the latest inflation figures out of the Eurozone. Headline CPI, that is seen having held steady at 2% on a year-on-year basis in August, while the core figure, that's seen having slowed to 2.2%, down from a prior 2.3%, and that would in fact be the lowest level since late 2021. Of course, the next ECB policy decision, that comes next Thursday. Consensus and money markets both price absolutely nothing in terms of policy action. The ECB pretty much done and dusted with their easing cycle now that the deposit rate has reached 2%. Other than that, the only other notable release today comes at 3 o'clock this afternoon, and that is the latest ISM manufacturing PMI figures out of the United States. The PMI is set to rise to 49, up from a prior 48, so implying a slower pace of contraction, although it will, of course, be worth watching the employment sub-index, particularly ahead of the jobs report, which we'll be getting on Friday lunchtime. Other than that, not much on the data docket. Earnings pretty much over for the quarter, now that Nvidia have reported last week. Speakers from a central bank perspective, also relatively light, just due to hear from the ECB's Muller mid-morning. And of course, participants will be paying attention to developments elsewhere, not only in fixed income, but also any trade, tariff, or geopolitical developments as the day progresses. And that is all from me this morning.
Wonderful. Well, as Michael said, I think a lot of us will be just keeping a beady eye on what's going on in gilts, etc. today, because it's all looking a bit shitty, to be honest. But whatever you are doing, if
Is
you're
that
not
a
trading
technical
gilts,
term?
Yeah, yeah, very much so. But maybe a little bit too technical for those in the treasury. Whatever you're doing today, if you're managing to stay away from gilts and you're not trading gilts, good on you. Stay away from them. Definitely don't try and catch the falling knife. Not trading advice for us there, but please do not. Yeah, stay safe, keep it tight, and we'll see you all tomorrow. Much love.
Indeed. Bye for now.